Hey everybody, Larry Berman here, and here's what's on my radar this week. Well, it's good to be back in the driver's seat again. Those of you who've been following me know I had a little bit uh, of a challenge with a back surgery I first had in November. A couple weeks after that, started to have some complications. Had another surgery on Christmas Eve. Week after that, started to have some more complications. A week ago, I had another surgery. So three surgeries, same injury after more complications. So fingers crossed, toes too. And if I could cross my L5 and S1 and L4 and L5 and cross all those, I would do that too. So hopefully the worst of it is behind us. I've got my green shirt on today. Big green day. Let's have a look at the chart. So big headline crosses the tape right at 4 o'clock. NASDAQ closes up 2.9% in the biggest one-day gain since November 30th. ... Then, of course, stocks tanked 12%. You can see that big move up here in November, and then the subsequent sell-off. So here's what I'm thinking. The NASDAQ and big tech have led the bear market. Everybody knows that. Not a big surprise. Shouldn't be to anybody. This downtrend still rallying, failing to get above the 200-day. And so the tech leadership is still very, very weak. Now, on the recent move down, we did come close to the October lows and held. So big positive. Names like Apple slightly undercut the levels. A few other big names slightly undercut the levels, but the market's holding. But by no stretch of the imagination is there anything to get remotely bullish about. So again, I hate to say it, another failed bear market rally here coming up. And I think psychologically, really important to test for a lot of markets, but for the NASDAQ in particular, the pre-COVID levels, the pre-COVID high, the COVID gap, what I call this move down here when the market started to have an epiphany and say, oh, this might be something after really ripping to start the year. As you could see there, the NASDAQ really, cheap money led the world. So I think we got to get back to that point. And I'm not looking for a bottom big picture until we do that. So if we do undercut those lows eventually, recession scenario plays out, not hard landing, but recession, moderate, earnings come down. I think the NAS comes into this range. The S&P undercuts the low as well. By how much, I have no idea. But I need to see that behavior before I can start saying washout. We probably need to see yields, US 10s and 30s, push back above 4% again and prove that the colossal amount of debt supply coming in the next year or two is not going to be a problem in being dissolved by the marketplace. You've got less foreign buying, you've got quantitative tightening, and you have 1.2 trillion fiscal deficit that you need to solve for as the debt ceiling battle rages. Now, they're not going to default. They're going to do all these things, but it's going to come down to the last minute. It will, because it's more politicized than ever, especially with Senator Joe Manchin coming out today and saying, there's a deal to do here, but we got to balance the budget. There's no chance, unless you fire half the civil servants in the U.S., that you're going to come close to even the notion of balancing the budget. It just shocks me how, unaware many of these politicians are as to how catastrophic the fiscal outlook is for the U.S. And so the drag on growth is going to be pretty significant over the next 2 years, I believe. And it's just going to be a challenge for the markets to do anything bullish. So I think you take the advantage of market rallies to lighten up, to look for places to short. I've been buying ratio put spreads for months now. What's a ratio put spread? You buy 1 unit of a long put on the name that you think is going to pull back. You sell 2 units at the levels you want to buy that stock is. Market pulls back, you cover the long, you expose your puts. You either get put the stock or you earn a lot of yield. And I love those strategies. They've been paying huge dividends and yields for our clients in the last number of months. Got 2 of our strategies that had significant positive gains in 2022 that utilize heavy use of option strategies. And we are in the market environment, and possibly for the next year or 2, where strategies like that are going to be essential. Buy and hold, it's going to be much more of a challenge. So for our bull and bear pick of the week, we're going to take a deep dive on Netflix. 2 ways how to play it if you're bearish, if you're bullish. When you look into the NASDAQ and saw what moved today, so you got Netflix. Say, okay, great name. Love to binge watch. I love Netflix. I was in the hospital. I binge watched. What did I watch? It was a Money Heist. Money Heist, great 12-part series. Literally the whole day on holiday Monday, as the U.S. was closed, I binge watched all 12 in a row, and it was interesting with the Spanish subtitle, or the Spanish speaking with the English subtitles. Anyways, very, very good flick about breaking into the Spanish mint and holding some hostages, and it's kind of neat. So would recommend that to anybody who likes money heist type of movies. So, but Netflix. So you look at the big gainer, Netflix. They got more users. Those are fickle numbers. You get 1 or 2 good shows for a quarter or 2, but you've got a lot of saturation in there, and maybe there's some more ways they can generate money. I'm not gonna ever not use Netflix. I think for what you pay, it's pretty compelling proposition, considering you for one movie you would pay $15 easily, right? So you've got this whole streaming thing there. So I love the business model, but the thing is Netflix worth 30 times forward earnings, right? And so let's do a little bit of a deep dive here, and I'm going to start doing some deep dives on these names. And if you look at the analyst consensus, so 120 earnings report, all the analysts update their numbers. You see guys who are bearish with a 250 sell, and you see a few out at 400 in terms of a buy, and a bunch of them kind of in the middle. And so you got 345 consensus, but the spread is, football, stadium kind of, you can drive a truck through it. And so there's not a lot of consensus in the consensus on what Netflix is worth. So how do you play this puppy? Well, let's look at a chart of Netflix here. Say, well, where do you want to own this name? Let's look at the big picture. Let's blow it out to the 5-year, and you see, this was, okay, COVID, stay at home, everybody on the planet's going to watch Netflix for the rest of their lives valuation. Okay, that was never sustainable. Anybody who would think that is really out to lunch. But if you look at that and you say, earnings failures and gap down and so forth. So 200, below 200, 160 it got down to. So where was the last time it was at 160? And then, of course, you see this big move here where the Trump tax cuts came in. So, there should be some fundamental support down in this range. I think you've got to consider it down there for sure. So how would you play that right here? So what's the upside here? Maybe 400 on a rally where the analysts kind of think it's capped. At 342, that's next year's consensus number already. I just showed you that. So let's sell a 400 call. Okay, so that's a conservative way out to September. So September timeframe wise, seasonal weakness, September, if we get a recession, kind of lines up. 400 call for September. See what that's trading at here. So 400 call for September. I'm going to get 28 bucks approximately, maybe 29, somewhere in the middle there in terms of premium. So you're picking up for $342, you're picking up about an 8% yield on Netflix to sell it up there. Now, of course, if it goes higher, you're short the stock at 400. To me, that's pretty rich valuation. Now, you want to play the downside? Okay, let's look at the put side of things and say, well, we like that sub 200 area, right? The 200 to 160 area. So a 200 put right now trades at 515. So you can sell two 175 puts, pick up, let's say you can get about 290 for those. You're going to pick up $5.80. You're going to pay 515 for the put. And now if the market sells off, you're going to make money on that long put. And then at some point you expose those options to earn the yield at 175. And if it's below 175, you get to buy it. At that level, valuation's pretty reasonable. Have a great week, everyone.